Hello and welcome everyone to the week ahead commodity report, where we will be reviewing the markets for the week ahead. So first of all, what do you need to know as we go into next week? Well, of course, on Friday, we saw a U-turn from Donald Trump saying that he has not agreed to roll back tariffs on Chinese goods, which is going to set up for a very interesting week here, specifically as we also have Jerome Powell next week, who is due to give testimony in front of Congress. So with that, going into a fresh week, what should you really pay attention to here? In the latest week, we have seen hedge funds increase their long positions on gold and silver again. Bear in mind as well that in the latest week, we have seen silver prices drop 7%. Gold has had the biggest weekly move in over 3 years, and oil prices as well. Last week, very favourable for just short-term trades. In fact, we caught another quick 100-point sell-off on oil just on Friday. Now, the biggest question that we're getting at the moment is with regard to, of course, the Federal Reserve cutting interest rates this year, the trade war tensions, the overall global economic slowdown, all the concerns with Brexit and still geopolitical risk in the background. Is this then setting up for a fantastic buy opportunity for the precious metals, given that silver has sold off by over 7%, platinum pulled back by over 4%, gold prices had the biggest 1 week move in over 3 years. So with that, let's go over to the charts and let's explore that in a little bit more detail. So first of all, let's move over to gold here. So gold now is trading at $1,458 per ounce. As we mentioned many times before, do not FOMO into gold at these highs. You don't want to be buying it at the upper end of these ranges. We broke out certainly the week before last back towards that 1,510, 1,515 zone before we then saw the sell-off. So we actually banked over 700 points here on gold on that breakout to $1,512 per ounce before the Friday non-farm payroll. Now, as we move into a fresh week, I would take a pause here as we go into next week and really observe how the price action does develop around this $1,458 per ounce level. We have essentially tapped the first level of support. We want to watch out to see whether that zone will get respected. If it doesn't get respected and we do see a rollover back towards the next levels of support, we could then see a move for gold back down to 1,445 to 1,435 dollars per ounce. If we were to roll over back below Thursday and Friday's lows here, I wouldn't expect next week for the price to get much below those lower levels. In fact, I would then look for a retracement and a move back towards that 1,475 to 1,480 zone. And again, midweek, we do have the testimony from Jerome Powell. That can be an explosive mover for gold prices. We may see a little bit more vulnerability as we go into next week if we do take out Friday's low. But many of you have been in touch with respect to this, where you're looking to build longer term positions. You're looking at the bigger picture here for gold, especially as we move towards the end of the year and the breakout, the seasonal breakout that we often get right at the end of December into January and February. And some of you are starting to really pay a lot of attention to gold at these prices for longer term positions. Great example of that is silver. Silver dropped over 7% to the downside last week. And if we have a look at the magnitude of that move, it's very similar to the sell-off that we got both at the end of September and also at the end of August as well. So the magnitude of that move, that sell-off to the downside, has meant that silver is now 300 points off the recent highs, or essentially $3. So off that $19.65 level, silver has managed to break all the way back down towards that $16.65 zone. So it is essentially coming back to a major level of support here again. Like gold, be a bit careful going into next week with respect to trying to pick lows at the moment. You want to make sure you see a little bit more buying evidence, and it is possible if we do roll over and break back below Friday's lows, we may get a little bit more downside here. The next major levels of support on silver will be residing approximately $16.50 per ounce, and then just below that, of course, you've got the major swing low around that $16 handle. But that's certainly a very significant discount on the recent prices that we've seen here, with silver essentially over October trading as high as $18.20 per ounce, and now it's at the $16.78 zone. Even from a risk to reward point of view for rotation back towards the upper end of those channels, we do see quite favorable opportunities, but we might see a bit more downside here before then we see the price action catapult and springboard much higher later on in the year and as we go into January and February. You have to bear in mind also that in mid-December we do have the FOMC statement, which can be a catalyst historically for a large move on both gold and silver. But not only that, this year we also have on the 12th of December, the day after the FOMC statement, we're going to have UK elections as well, alongside the European Central Bank announcement. Also, platinum, if you have a look at platinum, in the latest week it's dropped over 6.75%. Now, we mentioned previously that we'd capitalized on over a 660 point move on platinum the previous week. In fact, we banked another 150 points on platinum just last week. And where we're at the moment, we're just waiting to see where this is going to settle. We are coming back down towards that $889 per ounce level at the moment, and I would be looking to see if we're going to just come back within those levels of support that we saw going back to September, which is around the 860 to 880 level. So I really want to see whether platinum is able to follow through further here. We're not looking to get right back in this market yet. We're going to wait for the dust to settle a bit, and really these big sell-offs, they can provide some fantastic opportunities later on this year if you are prepped and ready for it. And then finally, moving over to crude oil as we go into next week, we've taken advantage of this volatility a couple of times in the last week. It's been quite range bound, but there have been some fast opportunities to be had here on oil. Essentially, as we go into next week, I'm looking for more of the same, bit more range bound price action between that $55.50 per barrel handle back towards the 58 level, and looking to capitalize on that range. So what we've seen essentially in the latest week is another tap back towards the upper end of that trend channel, which on a number of occasions has actually failed to break out. So what I could see happening going to next week, depending on whether we get follow through at the beginning of the week, essentially on oil, if we were to break out at the start of the week, have a move back towards that $58 to $58.50 per barrel handle, this is a zone where I would be looking for, again, selling pressure to come back into oil, and then for a sell-off back towards the $55 level there, executing additional sell shorts if we were to see a move up towards that level of resistance again, if that's the way the price action is going to play out going into next week. On the other hand, if we do see a rollover from the current price action here from Friday's close, especially given the U-turn from Donald Trump with respect to the progress between the US and China, if oil starts rolling over immediately at the start of the week, I would also see that as an opportunity to take the price action back towards the lower end of the range here, back towards that $55.50 per barrel handle. So essentially, still looking to capitalize on that range going into next week. I see limited upside, about $1 or so in price to the upside from here, but more opportunity to actually sell it short back towards the $55 per barrel handle for WTI crude oil. And also, we'll keep you updated as we go into next week on both oil asset of the day and also gold and silver asset of the day too. And with that, if you would like to join a community of successful traders and learn a research-driven process to your trading, which takes advantage of our in-house intelligence, trade flow, fundamentals, seasonality, cycles, retail positioning versus hedge funds and money managers, and marry that up, of course, with geopolitical news, fundamentals, our research, this is what will give you an edge in the markets, not only looking at technical analysis alone. So with that, if you would like to become a member of the Gold and Silver Club, there is an opportunity for you to do so. Members get access to our exclusive live trading room webinars, real-time trade alerts, you have access to real-time trading research and market insights, access to our private Members Academy website, and also support and one-to-one mentoring. For more information about the service, please just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel, that way you're always kept updated with all of the latest commodity reports.